You have already mastered traditional investing, but what if the rules of ownership, security, and long-term growth are being rewritten right now? In today's presentation, we're going to take a deep look at Bitcoin versus stocks. We will compare the two asset classes and we will find out what are actually the advantages and disadvantages of both of these assets. At the end of the video, you will exactly know what are the strengths and the weaknesses of both of these asset classes. You are not looking for hype. You're looking for an edge based on facts, not emotions. So throughout this video, we will do a performance comparison where we will find out how did the asset classes perform in the last quarter, in the last year, and in other time frames. We will also look at the key differences to really understand each asset class. Also, we will look at some investment recommendations. In the world of high net worth strategy, timing is critical, but so is positioning. And one asset silently outperformed nearly everything in 2024. And it was not stocks. In this first slide, we take a look at the asset class fundamentals. So what are the fundamentals of Bitcoin? What makes Bitcoin so unique and so great? First of all, it's a digital cryptocurrency powered by blockchain technology. The supply is kept at 21 million Bitcoin. There can never be more than 21 million Bitcoin. Bitcoin is decentralized. That means no central authority is in control of the asset. It trades 24/7 and it's always available on the market. You're always liquid. It functions as a store of value, but it also functions as medium of exchange. If you look at stocks, it's the ownership in a public traded company. Also, of course, there's a lot of regulation. All these markets are very heavily regulated. You are limited to the trading hours, so you cannot trade 24/7. You cannot trade on the weekends and you cannot trade on the holidays. The intrinsic value is based on the performance of the underlying company. And one big advantage of stocks are the dividends. So you receive dividends of your stock holdings. So in my opinion, your wealth deserves more than just a traditional investment vehicle. It deserves optionality, agility, and sovereignty. If we look at the performance of these two assets and we look at 2024, we see the light orange chart here is the S&P 500 and the brown one is Bitcoin. Yes, the stock market went up quite a bit, so the S&P had actually quite a good time. It's reaching all-time highs, all-time highs, all-time highs. But if you compare it here to the Bitcoin price, the Bitcoin price was back in January 2024 down at 41,800. S&P was at 4,900. Then we go up to November and we see that the Bitcoin price in November is 94,000. And yes, the S&P 500 is 5,800. But this is really a big difference, as you can see yourself on the chart. So if you have a diversified stock portfolio, you left 6 figures on the table last year if you're not in Bitcoin. The gap between old and new performance is not closing, it is accelerating. To understand the two asset classes even better and compare them against each other, I prepared this slide for you. So in the first column, you see first we are comparing market hours. We have seen already that Bitcoin is liquid and tradable 24/7. This is why we also see sometimes on the weekend, if something happens in the market, if something bad happens in media, you can see that Bitcoin is the first one to move. So it's, so to say, an indicator for stocks, what will happen on Monday when the market is opening. Volatility, we still have a 3 to 4 times higher volatility than in Bitcoin. But if you know anything about the markets, this is also a good thing. So you need to have a long-term horizon to be able to profit from this asset class. In stocks, you have a moderate volatility. It can be quite volatile at certain times. So over the latest weeks and months, we have seen quite a volatile period, but usually Bitcoin is still much more volatile. What about regulations? We see more and more regulations coming into Bitcoin. So in most of the countries, Bitcoin is a commodity. In other countries, it's treated differently, but there's a lot of frameworks. We have now the Stablecoin Act. We have now all these frameworks coming in. So Bitcoin is now a totally safe asset and it's regulated. On the other side, stocks, they are very well regulated because they are not new. They have been around for a very long time and they are regulated under the SEC framework. Also, Bitcoin and cryptocurrencies are regulated under the SEC framework. Let's look at the value source. A lot of people don't understand why actually Bitcoin should have value because it does not have any underlying company performance or cash flow. Well, the key is actually that the value is the network utility and the scarcity. The network utility means that the network is growing all the time and you have so many people inside of this network that this is actually going up and up and up. So you have this network effect. And also the scarcity, we're talking about the limitation of 21 million. Also, you have every 4 years the halving cycle. That means like every 4 years, the amount of Bitcoin that gets mined and is basically the supply is being cut in half. This produces more and more scarcity even every 4 years. Income generating. In Bitcoin, you have the options that you can stake it and get yield. You can also take out a loan and lend against your assets. You have the tax advantage. In stocks, you have dividends and capital appreciation, and Bitcoin has to pick up on this level. So there will be, and there are already some products that are giving you much higher yields. This is basically like dividends. So if you stake your Bitcoin, you also get dividends, so to say. We would call it in stocks dividends. The storage, how can you actually make sure to hold your Bitcoin in the right way? You have a digital wallet. If you really want to be safe, you need a cold storage. For stocks, you can't really hold it yourself. You need a broker account, right? So your stocks are at your broker. Traditional investment is built for 9 to 5 markets, which are very limited. Bitcoin never sleeps, and neither does asymmetric opportunity. Let's dig a little deeper into the institutional adoption of Bitcoin. Since 2024, we have the ETF approvals. We have a lot of money flowing now into the ETFs. We even have seen days where we have 1 billion or more inflows into the Bitcoin ETF. We have explosive growth. These Bitcoin ETFs, as discussed, are really picking up, and it's the most successful ETF that was ever launched. The current state is that we have 138 billion in the Bitcoin ETFs already. There's multiple issuers, so we have BlackRock, we have Fidelity, we have loads of issuers, but BlackRock is at the moment the leading Bitcoin ETF and also leading Ethereum Bitcoin ETF holder or provider. And we can see till now that smart money has already moved. What was once fringed is now managed by Goldman or BlackRock. So all of these companies, all of the financial industry is waking up and picking up on the best performing asset of all times. Let's look at some investment strategies and the risk assessment for these two asset classes. Here on the left side, first of all, we look at the Bitcoin strategy. What is the best strategy for Bitcoin? Well, traditionally, over the last 16 years, it would have been the best if you're just holding it. So hodling is the term we use in Bitcoin. Long-term buy and hodl approach. So you just buy it and hold it. Also, you can dollar cost average. So you just buy every day or every week or every month a certain kind of amount, and you don't even look at the price. Or you do volatility trading, so you capitalize on low prices, you wait till the price goes down, you buy it, and then if you're a trader, you sell it at a higher level, or if you're not a trader, you just keep it and hodl it. But your entries will be better than your dollar cost average if you have discipline to do it all the time. What could we define as risk in Bitcoin? We could define the extreme price volatility for some people as risk. It's also an opportunity, as you know. So if you are managing to get in very low, then this is a lot of opportunity. You need an asset with a high volatility to really have a good opportunity. In some countries, it's not very clear how it's regulated, basically, but I would say the regulatory environment is totally fine now, and this is a safe asset in this case. Market manipulation concerns, like in every asset, we have big players with a lot of money who try to manipulate the market. As you know, you have this in gold very heavily, you have this in stocks, you have this in every asset class. For the stock market strategy, you could be, for example, a value investor, so you look for undervalued companies and go into these companies. Could be a growth investor, high potential expansion, so you need to understand the narrative, you need to go where the market is going to, what are the next technologies, what will probably happen, and so on. Dividend investing, so regular income through dividends. You buy the stocks which will give you most of the dividends, and you can actually have a static or a steady income from that. And you can do index investing, a broad market exposure. But if you don't concentrate, then probably your wins will not be that high, but your risk is smaller, of course. What are the risks in the stock market? Market downturns and corrections, as you have in every market. Company-specific failures, so it could be that one company has got some failure, the product doesn't work anymore, they have some crisis, they have something going on. So this would be a risk if you're not diversified. It could also be an economic cycle sensitivity. So if you go through the investment cycles, some assets don't perform very well in certain cycles. And if you're just in stocks, or if you're mainly in stocks, there's also a sector concentrated risk. This could be overall, or if you're just in a specific sector, if you're just in the agriculture sector, if you're just in commodities and so on. So this could be a sector risk. As you know, every asset has got risk. What matters is how you design around it. Real wealth isn't about avoiding volatility, it's about measuring it. And one more thing I want to give you on your journey is the great taking. If you're a stock investor, you have to know about this. This is very important for you. Well, let's have a look what it actually is. The problem is that you're just a beneficial owner of your stocks. So you don't legally own your stocks. Probably most of you watching this video will not believe me. Please do some research about the great taking. So what basically happens is that your legal title is held by intermediaries like your broker. If there's a crisis, if this broker goes down or if the bank goes down, your assets can be seized. This was happening the first time when Lehman Brothers went bust. On the other side, for Bitcoin, this is a very big advantage of the asset class, of the crypto asset class, especially Bitcoin. You can hold it yourself. So it's a direct ownership. You have the private keys and you control them. You have no intermediaries. And one more big advantage, it's portable. So you can travel with your assets in self-custody. Because what you think you own might not be yours in a crisis. True ownership today means holding something no one can seize, especially when it counts most. If you're managing serious wealth, this is not just a trend, it's a strategic pivot. Book your complimentary Bitcoin strategy call at strategy7.io and discover how to protect, preserve, and grow your assets with confidence. I hope you enjoyed the video, and I see you in my next video. Take care. Bye-bye.